Charleston, and welcome to this week's edition of Navigate Your Wealth, brought to you by the team of Compass Financial. I'm your host, Kristen Oakley, and joining me in the studio this week is the CEO of Compass Financial, Karen Stawicki. We've got a great show for you today. Today, we are going to be breaking down the power of the Roth IRA. Now, even if you think, oh, I don't qualify for one of those, or this doesn't apply to me, trust us, you're going to want to stick around and find out. We're going to be sharing some information that not a lot of people know that might really benefit and behoove you. So, Karen, my friend, great to be here with you.
Thank you so much. I see we matched in our colors again. Good job.
Love that. And of course, we miss your beautiful daughter, Sam. She couldn't be with us today. She's busy being a mom, which is the most important job she'll ever have, right?
Absolutely, absolutely. We will miss her. She finishes my sentences and corrects me when I say something, but we'll let her be the mom role today.
Yes, for sure. Well, I know you're a proud grandmother too, with 4 grandchildren now. It's amazing.
Yeah, absolutely. They just all of a sudden multiplied, so
I know, right?
We are happy. That's right.
That's awesome. Well, again, today we're going to be focusing on talking about breaking down the Roth IRA, and the reason and the inspiration for this show was because we know that there's a lot of confusion out there, the difference between Roth contributions and Roth conversions, and really this is something that we didn't want to take it for granted that anyone knew all the ins and outs, because there is so much to know. And we've got a really powerful resource we're going to be sharing with you today that previously was only available to clients of Compass Financial, but we believe in it so much we wanted to share it with all of our viewers. So it's going to be a great conversation.
It is. It's going to be. And you know, I realized after watching the shows back that I talk about Roth conversions all the time. I talk about the fact that Sam and I are kind of known as the tax terminators, and we're trying to, you know, have you pay the least amount of taxes as you possibly can, and how your CPA is only looking at the past year and trying to reduce your tax liability and not really looking at the total tax burden. And so the tool that you mentioned, which we'll talk about in just a moment, is really that tool that all of our viewers can tap into and see what their tax burden is as well. But you talked about Roth conversions and Roth contributions.
Right.
And I know I had one client, and as soon as I started talking about we have to get this IRA converted to a Roth, she immediately cut me off and said, oh no, I make too much money. I don't qualify for any Roth. And I had to explain to her that there's 2 different terminologies. The Roth contribution is regulated by the government, and if you make too much money, you can't contribute. And of course, that number is really only $7,000, $8,000. If you have the makeup, it goes up a little bit every year.
Right.
But the Roth conversion is an unlimited amount of income. If you have $1 million of income, God bless you, but you can still do a Roth conversion. And so what I wanted to do today is really help clients understand, or the viewers understand, that it's really a lot easier than you think. It isn't scary, and we will help them actually walk through the numbers so they can see exactly what that looks like.
Now, I'm guessing that this person who originally thought that they earned too much, made too much, probably had the bulk of their wealth saved up in a tax-deferred account. And maybe that's you watching at home as well, a 401k, a 403b, maybe a traditional IRA. So typically that's where the majority of someone's retirement savings are, right?
Well, absolutely, because remember, when you first went to work, your employer, your CPA, and probably your mom or dad encouraged you to put money into that 401k.
Yes.
And as we always say, if you have a company match, the first rule of financial planning is take the free money.
Yes.
So we definitely wanted people to put money in there. Sadly, back in the 80s, when I first got in this business, I said, put as much money away now while you're in your highest earning years, because you're going to be in a lower tax bracket when you retire.
Right.
Now, actually, the top marginal bracket in 1980 was 70%. If you were a married couple earning $100,000, you were in the 59% bracket.
Wow.
And so retiring today, my clients are still complaining that they have to pay tax, but they're paying at 20, 25, 30, 35 tops. So it was a good deal for them. But people who are saving today, you know, they save, they got the tax deferral, and now when they pull the money out, it's 100% taxable. Okay, what's done is done.
Yes.
Okay, we can't cry over spilled. Actually, yesterday I said spilled grapes, and somebody said, no, the expression is milk, and I said, well, no, I was spilled over my wine.
Right.
But anyway, but here's where the Roth conversion really comes in. And so the perfect story is the gal that you were just talking about that came in. She said, I can't do this. She had a $1.4 million between her IRA and her 401k.
Okay.
And so we couldn't do anything with the 401k initially, but with the IRA, we ran the numbers, and on that $1.4 million, the total tax burden, if she does the government's way, which is kick the can down the road, wait till you have to take required minimum distributions, and sadly in our calculator, sadly with our calculator, they make you die at 90. We should fix that.
Right.
Okay.
Because we're living longer.
Exactly.
We digress.
But if you die at 90, this $1.4 million IRA will cost her and her family $1.6 million in tax. 1.6. When she saw that number, she about fell out of her chair. She said, I don't understand it.
Right.
Well, what happens is that money grew at 73 for her. For many clients, soon it'll be 74 and 75, the required minimum distribution age. But when she takes that money out, the account is still growing. So then the required minimum distribution is calculated again the next year and the next year and the next year. Well, when she dies, in this case at 90, there was still money in the bank. And that's still taxable to your family.
Yes.
So $1.6 million was the revealing hard number to swallow.
Yeah,
so I said, wait. Let's look at if you do a Roth conversion, you could pay just shy of $500,000. Now, that is still not an easy check to write to the IRS.
I was going to say, no one ever likes to stomach the tax,
ever wants to write any amount to the IRS. But I want to ask you, if you have the choice to write 1.6 or 500,000, which one are you choosing?
I'll take the 500,000 all day, every day. Yep.
Well, and here's the key. That's $1.1 million of optional tax. You know why I call it optional?
Why is that?
Because you opted to take the government's plan. That's $1.1 million more than you have to. It is totally legal to do a Roth conversion and pay $500,000.
Right, because again, we're not talking about tax evasion. We're talking about using the tax code and doing what's there to help you not pay any more to the IRS than you are legally required to pay.
100%.
That's the key.
That's exactly right. So if you are wondering what your tax burden looks like, I think they're putting on the bottom of the screen www.navigateyourtaxes.com. You can either type that in or use the QR code. It'll take you to a very simple calculator. You only need to put in a little bit of information, your name, how big your retirement account is, and then click the button. And you will find out exactly how ugly that number could be if you don't give us a call and find out what it should be.
Yes, no, this tax bill calculator is so key. So I just want to walk you through what you're looking at when you go to that site. So again, it's navigateyourtaxes.com, or as Karen said, just click on that QR code. Basically, it's completely complimentary for you to use. You're going to put in your name, your email address, so that a very detailed report can be emailed to you afterwards. You're going to put in your age and then how much money you have saved up in those tax-deferred accounts, those accounts that you have not yet paid taxes on. Then there's two sliders you can actually play around with. One is your current tax rate, and if you think your tax rate might change, you can play around with that. There's also the rate of return. So what amount do you expect to earn on this pot of money? All right, so you put that in, click submit, and then bam, side by side, you're going to instantly see the difference between what the government's tax plan is for you if you do nothing versus how much you could pay less in taxes if you enact some of these tax saving strategies that Karen is talking about. And trust us, once you see that comparison side by side, you can't unsee it. And then you're going to get a more detailed report emailed to you that's going to break it down, explain this, show it to you. No doubt after folks see that, typically jaws hit the floor. I mean, I know the first time I played around with it, even though I know this stuff, it's just mind-blowing when you can see it in writing and see the difference. But no doubt folks are going to want to have your help to know, okay, how do I pay less, right, than what the government's plan currently is?
Well, and when we come back from the break, what I want to do is actually help them understand what those steps look like, how to make the choices, and how the IRS gets paid. So We'll do that when we come back.
I'm excited to continue this conversation for sure. So again, hopefully you're visiting that site, navigateyourtaxes.com. But if you're listening to this conversation today and you're going, I already know that I want help figuring out how I can pay less to the IRS than we don't want you paying any more than you're legally required to pay, we invite you to pick up the phone and call that number on the bottom of your screen to schedule your very own complimentary meeting with Karen and Sam and the team of Compass Financial. That number to call is 855-348-3073, or if you'd like to connect online, you can just scan that QR code. That will take you over to a landing page, ask you a few short, simple questions, and then a member of the team will reach out to connect with you to schedule your complimentary meeting that way as well. I know you're probably intrigued after what we've already talked about. Stick around. As Karen said, when we come back, we're going to dive more deeply into this example and what it could mean for you. Stay with us.
Our office is based in Charleston, South Carolina, and we serve clients throughout the country.
Our office is small, it's personalized, it's customized, it's intentional. We don't want to be the big firm with so many different advisors that when you call us, you're not sure who you're gonna get. When you call us, you know you're either gonna get Allie, our incredible assistant, or you're going to get Karen or myself. That's our team. We promise one of us will answer your call.
Working with my daughter has really been a value add, we believe, for our clients because we bring different perspectives to the table from age and experience.
I had heard these stories and I had heard her talking about what it was like to help clients. It really gave me the confidence to know that I was in the right business, that I was doing the right thing with my life.
Well, welcome back to Navigate Your Wealth. I'm Kristen Oakley here with Karen Stawicki, CEO of Compass Financial, where today we are helping you navigate your taxes. If you're just tuning in and joining us, we just shared with you a very special resource that previously was only available to clients of Compass Financial. We wanted to extend it to you, our viewers. We invite you to go visit the site. It's navigateyourtaxes.com, and you can begin to see what these numbers for your potential tax burden in retirement might look like for you. And the good news is there's hope, there's solutions so that people don't have to pay this large sum of money to the IRS. I want to go back to this example of the woman that you shared in the first segment who had amassed $1.4 million in her accounts. You ran the numbers for her. She saw that, holy cow, I'm going to have to pay $1.6 million in taxes over my lifetime if I do nothing,
right?
Which again is mind-blowing that you have to pay more than what's actually in the account, right? Yeah. Currently. But let's break this down and what you were able to show her and then do for her to mitigate this tax burden.
Thank you, Kristen. You know, it's interesting because we will run a variety of scenarios to get the one that you're most comfortable with. Now, I understand writing any amount to the IRS is not comfortable, but our goal is always to have you pay the least amount legally possible. So $500,000, that could have been divided up over 2 years, 5 years, 10 years, whatever it is. If you go longer, it does get to be a bit bigger oftentimes. In her case, she wanted to know if I just ripped the Band-Aid off and pay it in 1 year, what would that look like? Well, she makes $800,000 a year. So if I took $1 million, which is what we were going to convert, if I take $1 million and add it to $800,000, you're in the top bracket.
Right.
But she said, okay, let me see what it is. And so 40% ended up, it was going to end up costing her, actually I think we did the whole $1.4 million in this scenario, $560,000. Okay. So she gulped and said, okay, so what's my next option? Right. And I said, well, if we do it over 5 years, that would be $280,000 a year. That added to your $800,000 of annual income will put you, but it'll drop you down to about the 30% bracket. So now the tax was only $98,000 a year. That was manageable because she knew that she could use that $98,000 tax, she could take it from her savings. You know, a lot of times clients ask us if they should net out the tax. And here's something that I want to share with you. If you take an IRA and you convert it to a Roth and you say net out the tax, you are having to take more IRA to get it over there. Your IRA is ordinary income tax. Yes. Whereas if you use investments or some other non-qualified monies, that could be taxed at long-term capital gains, which is only 10 or 15% for some people, right? So it's better to pay the taxes with outside money. So in Paula's case, what we did is we looked at the 1 year, which was going to be $560,000, or over 5 years, which was $480,000, which is why I said just shy of $500,000. Right. And that's the one that she chose to do. Now, what happens is the money gets transferred from the IRA to the Roth. The IRS is like me in the middle.
Right.
But they just get the reporting, and then you, with your tax preparer, make sure that you pay the taxes. So if you're not netting it out, they'll move the entire amount into the Roth IRA, but then you're going to get a tax report to, obviously, the IRS, and so they're going to want to make sure that you have it on your tax return.
Right. But that's so smart to strategically map it out. And I think the important thing to point out here was that you were doing it in such a way that it didn't unnecessarily then bump her up into an even higher tax bracket and cause her to pay more tax. I've heard horror stories, I know you have as well, of people who didn't understand how these Roth conversions worked, took too much out in any given year, and next thing you know, they're paying even more in tax than they needed to.
Well, and you know, we used to say just fill up the bucket, but I will tell you that there are actually some reasons when you just want to rip that Band-Aid off, and I'll give you one. So another woman who came to us from the TV show had $20 million. $10 million was in her IRA, and $10 million was in her investments in non-qualified buckets.
Okay.
So we looked at doing it over 5 years. Well, that's $2 million a year. She's going to be in the highest bracket 5 times.
Oh, yeah.
So by doing it in one fell swoop, it was painful.
For sure.
By doing it in one fell swoop, that gave her 4 more years for all of that $10 million to be in an account with only her name on it. She no longer had to share gains or profits with the IRS. It was 100% hers. So that was a situation where doing it all at once makes sense. You know, I often tell a story when they see the tax burden analysis, the $500,000 versus the $1.6 million.
Right.
And I say, you know, $500,000 is like ripping off a Band-Aid. It's going to hurt.
Yes.
You may even draw blood.
Right.
But $1.6 million is death by 1,000 paper cuts.
Yes. No, that is such a good analogy for sure. And I think, you know, again, this points to the fact that these strategies have to be thought through and planned individually for people. Everyone's situation is different. So again, it's not a cookie cutter approach, and you have to sit down, run the scenarios, and see what makes the most sense for you.
Yeah. And you know, one of the things, we love to think outside the box.
Yes.
So one of the things that we have done, and there's a story in our book about it, is we sometimes will turn on a client's Social Security and use that money to pay the tax.
Which you were the first person who I ever heard say that, and I remember thinking, holy cow, why is that not more widely used as a strategy? But continue, because this is a game changer for a lot of people. The perfect
example for this individual, you know, at 62, you can turn on your Social Security. That's the first age that you're finally eligible. And most people want to wait until they're 70 because they get that 8% bump every year.
Right.
If you turn it on at 62 and you're working, you can't make more than $22,000, or you have to give back $1 for every 2. So if we have that situation where somebody's working, we're not telling them to turn on their Social Security.
It just doesn't make sense.
It doesn't make any sense.
Yeah.
But I had a client who was 65. He was full retirement age. He was still working, had intended to continue working for another 5 years. And when we suggested that he turn on his Social Security, he, of course, jumped in and said, oh, no, I'm not going to turn it on until I'm 70 so that I can get the 8% bump, and I don't need it. And I said, okay, hear me out. Because you don't need it, it's perfect. You're still going to get a bump every year because they have the cost of living increase.
Right.
But by turning that money on now, here's what we're going to do. His income from Social Security was $3,000 a month.
Okay.
That's $36,000 a year.
Right.
At his tax bracket, that allowed him to convert $120,000 from his 401k or IRA into the Roth. We took that $36,000, kissed it, put a stamp on it, and sent it right back to the government. We used the government's money to pay the taxes.
Yes.
He didn't want it anyway.
Right.
Well, and then he said, oh my God, that's brilliant. And so what was interesting was that over the next 5 years, as that Social Security increased, we were able to take a little bit more and a little bit more and a little bit more. But even if he had only done the $120,000, that's what, over 5 years, $600,000 that he was able to convert?
Yeah.
$600,000 that he was able to convert.
Yep, and that's amazing. So again, no two strategies are alike because no two situations are alike, but these are different concepts and different out-of-the-box ways of thinking that maybe you haven't thought of yet. And so one of the things I would encourage you to think through is if you're already working with another advisor and they're not having these kinds of conversations with you, it's time to get a second opinion. And Karen and the team of Compass Financial would love to be able to provide that for you. And no doubt, once you visit navigateyourtaxes.com, we know you're going going to have some questions. Again, we invite you to use that complimentary retirement tax bill calculator to see what those numbers could look like for you. And then once you have those numbers, we invite you to call and schedule that complimentary review with Karen and the team of Compass Financial to see what the strategies might be in play for you. 855-348-3073 is that number to call. Or again, you're welcome to scan that QR code and that will get you connected as well. We'll be back on with more on this conversation of unpacking these Roth IRA conversions and what it could possibly mean for you right after this.
And at 30 years old, being on a unicycle is really not a problem because if you hit a pothole, i.e. market correction, at 30 years old, you flip off, jump back on, and keep on riding. But at my age, 65, if you even got me on a unicycle, now I hit that same pothole, I'm pretty sure the next vehicle I'm getting into is an ambulance. So I decided that we needed to put 2 more wheels under this old bottom and call it a tricycle. And that's how the Power of 3 was born, because now, instead of just being in the market, we have 3 components which also happen to be the job descriptions of money: growth, income, and liquidity. And with those 3 things in place, you can put your head on your pillow at night, sleep like a baby, knowing that you have a plan that you can live through retirement with without worrying or losing sleep.
Welcome back, Charleston. You're watching Navigate Your Wealth. I'm your host, Kristen Oakley, here with Karen Stawicki, CEO of Compass Financial. We've been unpacking today what it means to engage in Roth conversions. And as we said at the top of the show, if you're just tuning in and joining us and you're going, oh, I don't qualify for a Roth account, well, hopefully we've shown you that this is something that is available to most people, right? I mean, if they have the option to move money from being taxed always to taxed never again, you definitely want to take advantage of that. And one of the things I want to highlight today is this awesome book, The Power of 3, that was written by Karen and her daughter, Sam, also her business partner. And there's a lot of important concepts in here. And I know that this ties in perfectly to our discussion that we're having today. So what would you like to share specifically about how The Power of 3 relates to this Roth conversion conversation?
Well, thank you, Kristen. You know, I love to talk about the Power of 3 in every episode because I think that clients, viewers need to understand that it took 44 years for us to be able to come up with this. This is truly the solution to a worry-free, confident retirement. And the reason is because I have learned, and I shout it from the rooftop so that everybody I talk to can know it as well, that money is only capable of doing one of 3 things. It can either grow, it can be provide income, or it can be liquid. And the commercial break that just showed before this showed a cute little story about how that was created, right? You're riding a unicycle and so forth. But really what you need to understand is that when we give your money an actual assignment, the first thing we want to do is find out, what are your income needs? What are your expenses? What do you have coming in? Is there a gap? How do we fill it?
Yes.
Once we secure the income, then we can take a portion of your money and look at how to create the liquidity. You are going to have emergencies and opportunities in your lifetime. But we also know that it's critical that you keep pace with inflation. And so you've got to keep some money in the stock market.
Right.
But we know that the stock market doesn't only go up. So when the market comes down, if there's an opportunity for you to need some extra money, you're taking a vacation or you need the roof, because we have the liquid bucket, we go there and then we wait because we know that the market always rebounds.
Yes.
And so when the market goes back up, then we're able to fill the bucket back up and wait for the next time we have an opportunity or an emergency.
Right, versus taking money from your stock market accounts, if you will, when they're low, that means you lock in that loss and you've now sold low. No, what do you want to do? You want to buy low, sell high.
That's right.
So when you have that money to pull from in a different bucket, that allows the opportunity for that money to recover, and then you don't have to touch it until.
Well, and that's real. I mean, this is why we say when our clients secure the Power of 3 strategy, they put their head on their pillow at night, they sleep like a baby, they wake up in the morning, they're never afraid to turn on the news because there is no bad news.
Right.
You are never going to have to sell an investment on a bad day to pay a utility bill.
Yes.
We got that covered.
Right.
Right? So when we secure the Power of 3, we know that the risk of running out of money, check. we got the income to cover it,
Yes,
right?
for
The
sure.
risk of paying too much in taxes, and that's where the Roth conversion came in. Now, if we play our cards right, the guaranteed income that we have is tax-free income. That's the beauty of all of it. But understanding how to secure each one of those buckets with the amount of money that allows you to not worry about anything, it's a game changer.
It is a game changer. And as you were talking about the power of three, to your point, it also highlights the importance of having tax diversification among the different jobs that your money is doing. And that's why it's such a powerful representation. To your point, you understand, okay, this money over here is only supposed to do this one thing. I'm not asking it to try to do all these other things and be all things to me, right?
That's right.
Because it doesn't work that way.
You know, I mentioned that it took 44 years of creation to get this book. I started in this business in 1980. The market only went up in the 80s and 90s. We did the old-fashioned systematic withdrawal, and it worked as long as the market went up.
Right.
And when the market decided to hit the skids in 2000, 2001, 2002, the dot-com bomb, NASDAQ was at 5,000, dropped to 1,100 in a matter of 18 months. That was an 80% drop. You couldn't secure whether you were going to be able to get through another month, never mind another year. And I knew at that point I could never put myself in a position to have the conversation with a client, we got to cut back on your income, or you can't do those things that you thought you were going to be able to do. And so by understanding that we're going to assign every dollar a specific job, now money that's in the stock market is at risk 100% of the time. But now if you have income covering all your needs and liquidity for those emergencies, you can let the market do its job, because it will.
Right.
It always will if you let it do what it needs to do.
For sure.
Yeah.
Well, again, I'm so excited that we're offering this retirement tax bill calculator
Yes.
for our viewers to use. So let's put that up there for you again one more time. We invite you to visit navigateyourtaxes.com. You can go to that website or simply click that QR code on the bottom right-hand corner. That is going to take you to this complimentary tool. It's going to ask you for some basic information. You'll put it in, and instantly you're going to be able to see side by side the difference between the government's tax plan for you if you do nothing versus how much less you could potentially pay in taxes if you enact some of these tax saving strategies that we've been talking about today. You'll also get a very detailed report emailed to you. And no doubt, I know once folks see these numbers, they're going to be like, Karen, help me, please, right?
Well, and we can, and we really, really, really hope that the viewers understand that it is not a one-size-fits-all.
Right.
You are an individual, and we truly, truly are here to help you, to serve you, and to give you the answers that you maybe haven't been getting from the advisor you're working with now.
Absolutely. Well, Karen, I'm so excited for more folks to get to connect with you and Sam, and thank you so much for sharing your wealth of wisdom today. And we hope that maybe we've helped unpack some more, questions that you may have had previously regarding Roth conversions and about these tax saving strategies. Again, we encourage you to reach out, connect with that retirement tax bill calculator, but take it a step further. There's no substitute for sitting down in the financial planning environment and figuring out what the right answers are for you. 855-348-3073. We love you, Charleston. We'll see you next time here on Navigate Your Wealth.